What we have here at Vizsla Royalties is precious metals royalty, an NSR royalty portfolio covering arguably the world's largest, highest grade, undeveloped silver primary resource, and that's Vizsla Silver's Panuco project located down in Mexico. We are dual listed on the TSX Venture under the ticker VROY, as well as in the US and the OTC VROYF. I will be making some forward-looking statements today. So really, this is a threefold investment thesis for Vizsla Royalties. Again, we do have this Tier 1 silver royalty. We are, in fact, the only holder of a Tier 1 silver royalty outboard of those large three royalty streaming companies, those multi-billion-dollar companies. Again, this is one of the largest, attractive, high-grade, undeveloped silver primary resources on the planet, which, following Vizsla Silver's 2024 PEA, is now rapidly advancing towards feasibility, which should come out this quarter here, and then ultimately getting into that first silver by the back end of 2027. So lots of operational upside, of course, as we move from PEA into feasibility, which is based on an updated resource that I'll present here in a moment. But beyond that, there's tremendous amounts of exploration upside. Only about 30% of the known drill targets that Vizsla Silver has on its Panuco project have actually been tested. Almost 93 kilometers of vein strike, cumulative vein strike, have been identified to date, whereas the mine plan that will be in this pending FS accounts for about 8% of that. So tremendous amounts of exploration upside exist beyond the economics that I'll highlight. And then timing. I mean, we're all here for a reason. We're at the backdrop of a 15-year high in silver. Gold is hitting, new all-time highs. I mean, this is truly a remarkable time to be looking not only in the Explorer Developer pose, but of course in the royalty space. So here's a look at our principal assets. We've got a 3.5% NSR. That's a net smelter royalty owing to all of those light green concessions that you see. That covers really almost 95% of the proposed mine plan that Vizsla Silver's highlighted today. All of those other dark green concessions can contain a 2% NSR. So that's really those exploration ground where if Vizsla Silver is to make a new discovery, well, that benefits Vizsla Royalty shareholders directly without any capital outlay or dilution. Additionally, we hold a right of first refusal on any new property acquisitions that Silver is to make within a 24-month period. And really, they would have to make that. We would have to buy that for fair market value, but it's just another layer that we can continue to grow this portfolio incrementally. So just diving into the project quickly, this is, again, a large project. It's about the size of the island of Manhattan. You're about 15 kilometers wide, 15 kilometers long, 7 kilometers wide. Vizsla Silver itself acquired this property back in 2019. It dates all the way back to the conquistadors, so historic mining here. But you're located in the sweet spot of the Sierra Madres. You've got the San Dimas mine, First Majestic's flagship, about 80 kilometers to the north. That's a billion-ounce district. It's been in commercial production for over 150 years. Panuco here has zero commercial production, right? Existing infrastructure is phenomenal. You've got deep sea ports, access to rail along the coast, international airports, and 2 highways bisect this district. You're about an hour away from the coastal city of Mazatlan. Most importantly, it might be difficult for you all to see on the slide here, but there's green lines that run parallel to those highways. That's high tension power. It bisects the district as well, providing that access to very, very necessary infrastructure for silver to take the Panuco project into production here. Excellent corporate strength as well at Vizsla Silver. They've got $200 million currently in cash. They just were awarded a mandate for project financing up to another $220 million. This puts them in an excellent position to drive this project into that production and be able to satisfy those capital requirements. In fact, with a capital outlay of $225 million, they have 2x what their CapEx is to put this into production. I'm challenged to see another developer in the gold or silver space that has that type of financial backing. So the resource base and how it's grown, right? And this is just a glimpse. The first resource that was put out, you're looking at around 61 million ounces of silver equivalent there. In 1 year, about 100,000 meters of additional drilling, well, you can see you more than doubled that resource base. And then leading into this past year, the PEA was based on 156 million ounces of M&I mineralization. Well, last year was all about de-risking drilling. They increased that resource by 43% at a 5% higher grade. Everyone in the room knows that in a PEA, you can include that inferred mineralization, but of course, in a feasibility, it has to be those higher confidence categories of measured and indicated. Well, that's what you have here. You've got now 222 million ounces of high-grade silver equivalent going into that feasibility mine plan. And so here's the PEA. Obviously, the FS is not out yet, but you can see here the production profile. Over 20 million ounces in those first 2 years, tailing down to about 15 million ounces over the life of the projects, an 11-year mine life, producing 162 million ounces. I just mentioned that the M&I classification is now 222. So you can kind of put your thinking cap on as to how this could look like in a feasibility study that's pending. Again, very low cost operator here at $9.40, but frankly, that doesn't really matter to the royalty shareholders because we're only concerned about those ounces that are coming out. So the site layout here, again, just to give you an overview of where those concessions sit, the 3.5 relative to the 2%. And again, you can see all of that green color covering Copala in particular, and that's the backbone of the project. That's where mining will initiate. It's a 10-meter wide structure that runs for over a mile long, 1.8 kilometers, and it's open in every direction. In fact, all the 11 structures that you see on this slide here, they're open along strike laterally and at depth. Vizsla Silver has not touched the bounds of any of its mineralization. And that's just in the southwest. In fact, that blue hash polygon is what we were just looking at. And you can see how much more there exists. All those high-grade samples that we've taken represent samples that are over 500 grams per ton. But you can see here, there's multiple layers of exploration upside. As those structures are all open, we can incrementally step out and continue to expand and add more to that resource base, in turn affecting the economics of that mine plan. But also that orange ellipse represents what we call the proximal zone, or near mine targets. So if Vizsla Silver is successful in making a discovery there, it has a direct effect on the economics because you're within haulage distance to that proposed mill site. But also there's all these district scale targets, as I mentioned. That's where we largely have at Royalties the 2% NSR. But there's a discovery that was made right here at Animas, and you can see 6 meters grading 900 grams per ton. This is a world-class intercept. Vizsla Silver now has a drill rig back there following up on that fantastic discovery. So the timeline for Vizsla Silver here, you know, at Silver, they've published the PEA. They've got a test mine that's ongoing, the resource update that put in that 222 million ounces of M&I. They have submitted their permits as of February of this year, expecting to receive those permits sometime in the first half of next year. As I mentioned, feasibility here is pending. It's looking very attractive. And as soon as those permits are received, well, then you're off to construction, 18-month window to get to that first silver. You know, I'm not going to spend a lot of time on the management here. This is very much the Vizsla Silver team. So we're very intimately aligned with the project and, of course, both corporates. So on the cap structure here, you can see we've got just under 79 million shares outstanding. We've got excellent coverage from 3 notable brokerages, Canaccord, Raymond James, and CIBC. Vizsla Silver actually retained a meaningful ownership during this spin out. This company was spun out of Vizsla Silver, and of course, all went dividended out to its shareholders, right? So the shareholder base is the same. You know, if you held 3 shares in silver, well, then you received 1 share in royalties. Vizsla Silver now holds a 17% ownership, and so you can see this is a pretty meaningful block for Vizsla Silver. But I want to just highlight some comps really quickly. I know I'm running out of time. Because when we look at what we want to do with this asset in this file, there's an expectation by shareholders that we will transact. And I think if you think about the impetus of this company, always designed as an optionality to help Vizsla Silver, explore, develop, and get into production at its asset to be non-dilutive to shareholders, well, then that expectation really does come true. You can look here at the playing field and see that royalty companies trade at a premium. They trade at a premium to the silver producers, the gold producers, and of course the juniors. Average here of 1.7 times, right? Where we're trading today at, call it 1.1 times, which is a very attractive valuation. But when we look out over at recent precedent transactions, there's really two that come to mind. There's been a few others since creating this slide, but Triple Flag acquiring Orogen, right? This is a single asset royalty. They had a 1% NSR on the Silicon project. It was acquired for $343 million, right? That represents a 1.8 times PNAV multiple. That's price to NAV ratio, or net asset value. Another one, Royal Gold acquired Great Bear Royalties. Now, Great Bear Royalties was essentially the same spin-out model that we applied here at Vizsla Royalties. They were acquired, if everyone recalls, this would have been back in 2023. They had a 2% NSR on the Dixie project. That was pre-resource, so far earlier stage than where the Panuco project sits today. That was acquired at a 1.4 times multiple. So when you're looking at those precedent transactions and where those multiples sit, on an average of 1.68 times, you can see there's still tremendous runway here for shareholders to realize a nice re-rate on this file. Again, there's nothing else that exists like this project out in the industry today. We've got a phenomenal backdrop of commodities here with no end in sight as we continue to tick higher and higher, particularly with silver. And we've got all that operational and exploration upside to continue just bringing home the bacon. So thanks everybody for joining us today. We do have a booth outside and we're happy to answer any questions at any time.